Hello, my guest today is Dylan Pachulik. Dylan has been working in the New York City real estate industry for over 20 years. He's the CEO of XL Property Management. XL Property Management is a high-end residential property management company primarily serving the needs of absentee owners who hold investment properties in New York City, with a particular focus on luxury apartments and high-end properties. Welcome, Dylan.
Thank you so much for having me, Stephen.
So before we get into the current state of the residential luxury rental market and real estate trends, can you tell us a little bit about your background and your real estate career, and then we can talk about your company XL.
Perfect. Yeah, I actually grew up in Atlanta, Georgia, and then I moved up to New York back in 2002 to attend New York University. My family's actually in real estate in Atlanta, and I decided while I was in school that it wouldn't be a bad idea to have a real estate license. So in college, I actually procured my real estate salesperson license and started working at City Habitats as a rental broker. From there, I went to go work for a large real estate developer here in the city, spent about 10 years there, and decided to help fill this niche of managing individual apartments, townhouses, and small multifamily buildings on behalf of absentee owners. So Excel started back really in February of 2012.
So I read somewhere, I don't know, on the internet that you were like a top broker at City Habitats at least at one point while you were there. So how was it transitioning from sort of the brokerage side to the management side, or what was the inspiration there?
Yeah, so as far as the brokerage side, I was, one of the top agents in City Habitats. I was doing a lot of, larger share apartments for my friends in school, as well as other classmates I knew. And then once I graduated from school, I decided I wanted to work in real estate development. I wanted to learn the full ins and out of the real estate business and decided to transfer over to that segment of the industry so I could really cut my teeth and learn, more about the internal principles of real estate. So after 10 years of doing that, we actually had a need for an individual apartment manager, which is what led to the commencement of Excel.
Cool. So that was, and then you just decided, hey, I'm going to do this on my own, and you started the company. So I guess tell us, I guess, a little bit about the company in its current sort of state, and just the philosophy and what our listeners might want to know more about.
Perfect, absolutely. So we really started it, like I said, because we needed someone to help manage individual apartments for the developer I worked for. A lot of the clients of the or investors of the developer in a particular deal we were working on were going to get apartments in a building rather than profit on the deal. And since I was overseeing the deal, a lot of the investors came to me and they said, Dylan, when this is over, I'm getting four apartments and I don't want to manage them. I live a million miles away. Can you go find someone to help me? So I scoured the city trying to find the right resource to help them. And I really couldn't come up with anyone who I thought they'd be comfortable with. So one night at 11 o'clock while I was working in my office, underwriting a deal or whatever I was doing for the developer, I said, what if I manage these apartments? We can't find a good resource to send the clients to. What if we started doing it? And that's where things started from there. That was about 11 years ago. Today, Excel manages around $5 billion in real estate here in both Manhattan and select neighborhoods of Brooklyn. We manage everything from individual apartments, single family homes, to small multifamily buildings. And we're really considered to be the premier real estate company that handles these particular segments of the market.
So who are your clients? I mean, it sounds like you already touched on that, but
Yeah, I mean, our clients are really anybody who owns investment property here in the city. Some of our clients live overseas in countries like China or Japan or France or wherever they are. A lot of our clients at this point even live in the apartment next door to the one that they own, and they just don't have the bandwidth or the desire to manage, the property themselves. So, what started off with, a predominantly overseas client base quickly grew to a large New York following. And like I said, we have buildings that are, two units and the owner lives downstairs, doesn't want the tenant to know who he is. And then we rent out the apartment upstairs you know, and handle it that way so the owner's not having to deal with all these affairs by himself.
right. So on your website, it indicates that French, German, Hebrew, Dutch, Italian, Mandarin, Cantonese, Spanish, Portuguese, Japanese, and Russian are spoken at XL. So So how do you handle such a diverse clientele? Like, is there a language barrier, or are things done remotely? How do you deal with that?
It's definitely a challenge. I mean, between language barriers and cultural barriers and time zones, and in the Middle East, their schedule is Sunday to Thursday. In America, our schedule is Monday to Friday. Then we get Saturday and Sunday off. It's really a lot goes into trying to manage the operations of the firm, just given how wide our client base is. Everybody from Australia to Africa, to Northern Europe, and once we take into consideration time zones and everything else, it's quite a challenge to stay on top of everything we do here.
So in the market, recently, or let's just say in the last year, have you seen sort of a change in investors from particular countries? Or is it consistent? What have you seen out there?
Yeah, I would say there's definitely been a big shift. Even today, we were predominantly driven, all of New York City, from 2012 up to about 2018, it was predominantly driven by foreign investment. Once COVID came, we really saw a steep decline in the amount of foreign investment we were seeing. Even today, we're not seeing a lot of investment for, both economic and political reasons. So there's not necessarily a particular foreign investment group that's purchasing today. We are starting to see more Europeans coming today than we saw in the past few years. But really, it's a lot of, we're seeing a lot of domestic investors, actually. They're recognizing the value proposition of New York right now. We're living in this post-COVID world. Economically, things are, not exactly the clearest on what's going to happen in the future. But we are seeing, more domestic investors than I've personally seen in a long time.
Cool. So what do you think that Excel does different than other companies, and why would an investor want to work with your company?
I think the most important part of management is responsiveness and really caring about the client on an individual basis. And I found tremendously that a lot of other companies don't actually perform on what they say they're going to perform on. It's a lot of, high sales pitches and kind of lack of action once the contract is signed. I think what makes Excel most unique is we really care about our clients. We really want to see them do well. We want to see them succeed financially. We want to see them have a smooth or the smoothest operation we can possibly provide for them. And I think a lot of it just goes into the basic fundamentals of any company. If you're good at what you do and you care about your client base, you'll do well. And I think we're a true testament to that very simple concept. We didn't reinvent the wheel. We didn't do anything, we didn't make any, rare discoveries or anything like that. All we do is we manage property, but we do it at the highest level, and we do it with the element of care behind us.
Sure. So I know some people might be on the fence about investing, purchasing real estate in New York, and because they hear stories about bad tenants. Obviously, I have a lot of stories about bad tenants because I'm in that legal world. But what are some things that you would say to prospective investors potentially about how do you avoid getting in a situation where you end up having to turn a case over to an attorney?
Absolutely. And I think that concept is actually very simple. I think one of the biggest challenges that investors have about buying real estate in New York, especially in light of all those great rent laws that we were handed down in 2019, is they're scared of a deadbeat tenant situation. And you read all these stories in the Post or the Wall Street Journal or wherever about how some tenant moved into an apartment, stopped paying rent, destroyed it, whatever happened. And now we have this great horror story in the paper somewhere. I found, and you handle a lot of our L&T work, and I found that for the most part, if the owner is doing careful due diligence on tenant, we're running credit report independently. We're being given a score of at least 700, 40 times 1 month's rent is income, some cushion in the bank in case life happens and you lose your job, and you know so extra cash in the bank as reserves. If we're being careful about who we accept as our tenant and doing proper due diligence, I would say that would cut down on about 95% excuse me, of the cases that we end up having to perform evictions on. Every time that we end up in the bad story, we go back to do our, kind of post-mortem to see what happened and where things went wrong. And like I said, about 95% of the time, there was, red flags that were either ignored or no due diligence on the tenant was done at all, which ultimately led to the bad situation. But, if we've got a tenant that's got good credit, that's got good income and reserves in the bank, we have very few problems at that particular level. All the problems that I see are somebody forgot to run the credit or chose not to run the credit, and we kind of accepted a tenant blindly, not understanding what we were fully signing up for.
Yeah, it sounds like you inherit the problems basically. So if I guess the owners need to do more due diligence on the lease signing.
Yeah, it's really both the owners and the brokers as well. And brokers really also should fully understand what good financials look like and how to read a credit report and all these things. I actually had a call with the broker last week. We had a tenant move into our apartment. He paid rent the first month and then stopped paying after that. And I said to the broker, I'm like, can you send us over all the financial paperwork of this tenant so we can figure out how we're going to tackle this case? And she's like, yeah, it was good. He had a 600 credit score. I'm like, wait, what do you mean he had a 600 credit score? That's atrocious. Like 700 would be the bare minimum I would
Yeah.
accept. Oh, I thought 600 was good. I'm like, yeah, not exactly.
Well, especially you're sort of in the luxury market. So like before we just sort of tap into that market, it's like what are some of like the higher rents just to give our audience a sort of some perspective on like what's like a typical rent or a higher rent?
Yeah, so Excel really manages, from the middle of the market to the ultra luxury level of the market. I would say typically our rents range anywhere from, 8,000 a month all the way up to about 150,000 a month.
Wow.
So we really have, kind of the largest portfolio of these larger units, these 30, 40, $50,000 a month units. And, so while we do accept smaller units, we kind of gravitate, towards the upper level of the real estate market here in the city.
Cool. So it's July 2023 at the time of this recording. I was watching a podcast recently, the Urban Digs guys, Noah Rosenblatt and John Walkup, and they were talking about the rental market generally, and they were saying at this time it's pretty hot, and there's a lot of demand. I think that's typical of the summer anyway. But I'm just curious, what are you seeing in the luxury market? Where is it currently?
Yeah, I mean, we're really seeing bullish activity in all levels of the rental market. Obviously, the natural gravitation is for everybody to compare today to what was happening last year. We were in a completely different market last year. Things were out of control from a price point of view. Tenants weren't actually able to get apartments very easily. There was, long lines at open houses and bidding wars in almost every case we listed an apartment. Things are definitely very strong right now. I will say that we're definitely a lot calmer than we were last year. And I think that's a good thing. I mean, landlords need consistency. Consistency is a great scenario for landlords. When we start having wild swings in rent up and down, that really creates a lot of headaches. Obviously, we don't want to see things swing up too wildly because, what goes up comes down. So I would say we're definitely in a very strong, solid market this year. There is things are sitting in the market a little bit longer. We're not getting the huge increases we were getting last year, but I would say, especially compared to what's happening in the sales market, our rental market is quite, performing quite well right now.
Good. So I know you don't have a crystal ball, but so where do you think things are headed for the fall, or the I guess 2024, if you can look that far ahead, if you want to make any bold predictions or not, what are you thinking?
I always wonder this because you want to see, okay, what's coming down the pipeline next? Like, what are we looking at? There's so much uncertainty out there that it's really hard to predict. I mean, I think a lot of it is largely going to depend on what happens with interest rates and what's happening in the sales market. I know there's definitely pent up demand on the sales side that's not being fulfilled because interest rates are so high. And if I'm an owner and I want to either upgrade my apartment or downgrade my apartment, it's difficult with interest rates being so high because how could you leave a 2.5% rate to go buy something new and pay a 6% rate? So I think there's definitely a lot of pent up demand, and the higher we raise interest rates, I think the more pain we're going to have on the sales side. And the more pain that we have on the sales side, it's going to drive the rental market up even higher because we now have, you know, a lot of people who would normally be, buyers in the market are unable to do so with interest rates being so high. So, until we start tapering down on rates, I would expect that we're not going to have huge upticks in the rental market, but I would say activity will definitely continue to be very solid until, interest rates come down and the sales market opens up a bit.
Yeah, I mean that makes sense to me. I mean, I think a lot of it is also, economy driven, and we'll see the Fed is, they say they're going to keep pushing up rates, which, at some point I think there's going to be, some kind of, reset in the economy. I guess we'll see. Like, since not neither of us have crystal balls, and it seems like everyone's been saying that the employment is supposed to be slowing down and the economy is supposed to be slowing down, but it's just not. It's not quite slowing down just yet. So it'll be interesting to see how things play out in the months ahead.
Which is definitely interesting because we see prices going up everywhere. We see unemployment numbers way down. I mean, the Fed's trying their best to control what's happening, but the market seems to be ignoring it. And I think also, 2024 is going to be an election year. We're going to, there's a lot of instability we have left over from the past election. So I think a lot of that will hang on, to the election cycle and which way our leadership is going to go at this point.
Yeah, it's going to be a very interesting next year or so, for sure.
Interesting / scary. Let's hope that we could regain some of the composure we lost over the past.
Yeah, I'll just say one political thing. I'm not a political person. Is can't either party do better than what we have? Wow. Anyway, so Dylan, it's been really fun talking with you and interesting learning more about this market. Where can our viewers, find you and contact you?
Yeah, so obviously the best place would be to go to our website, which is www.xl-rpm.com. There we have kind of a basic overview on what Excel does. You can see kind of our sample portfolio. Excel does have a large portfolio at this point, so we probably have assets right by where you live. But otherwise, I'm available by phone or email anytime. And, we always love helping the market. Clients, once they do finally decide to go the route of property management, always swear by what we do. We have an important role. We get to help, save you money. We get to help your asset operate smoother. We get to help you from being kind of the whipping boy of the tenant when he's upset by whatever is happening or not happening in the apartment. So we're definitely a very vital and critical resource to have. And we'd love to show you kind of what Excel can do for you.
Great. So it's great talking with Dylan. Enjoy the rest of the summer, and looking forward to catching up with you again sometime soon.
All right, great. Thank you so much, Stephen. I appreciate you having me.
All right, be well. Thank you for tuning in, and remember to make every day great.